All right, welcome back to Robinhood Stock Market Watch List Group. My name is Carlos, and today is April 23rd. It is Sunday on 2023, and this is our weekly stock market meeting that we do regularly, except for weekend holidays. But one of our primary focuses with our stock market meetings is always to look ahead of what activity is scheduled to happen. So that way we know what's going to happen before it happens. And it is just amazing how precise that our information is and how accurate things happen by nearly 80 to 90%. And that's one of the reasons why we do this. This is one of the reasons why our group is also one of the most popular stock market groups on Facebook. Because of the material and stuff that we provide, as well as how we manage it. But ultimately, the things that affect the stock market the most throughout the week is always going to be economic reports. And if you're new to this, our meeting, or new to the stock market, you may have noticed that all of a sudden you'll see volatility hit the stock market. And then all of a sudden your news applications are going off saying, maybe what just happened. And so the idea is to not be in the dark and to be in that kind of situation. We want to know what's going to happen before it happens, so we are prepared for that volatility. That way we know what day is scheduled for what kind of volatility, whether it be bearish or bullish. And we always have to start with, we got to follow the source. We got to follow the money, and that can mean a lot of different things. But the main source is going to be our economic reports, because economic reports, when they come out, it's either good or it's bad. It affects the entire stock market system. So it only makes sense to start with what's going to provide the most volatility and kind of start working our way down. And one of the most popular sources that we use for economic reports is a website called investing.com. Also, it's a website, an application that we can download. So if you're looking at my screen here, I'm going to pull it up here. We're on the calendar area under economics. There's just a couple of things that we need to filter. And first, we got to clear everything in the filter, because there's going to be a lot of other things that's going to be selected. The only things that we need to see is we need to put a check mark under the United States. And then you'll notice under importance, you'll see a 1 star, 2 stars, and a 3 stars. We want to put a check mark under 3 stars and under the United States. That way we can pull everything that'll have the biggest impact for this week. And so once you click there, you'll see this schedule. This is a very important schedule for this week. That's also blended in with a very busy financial earnings week. So Monday, we don't see anything for Monday, obviously. So Monday is kind of like a calm before the storm kind of day. It's also a day that may be able to absorb any kind of weekend news. I haven't really seen any, major weekend news that can really affect the stock market Monday. Unless you guys can think of something, feel free to unmute your mic and you can provide something to the table here. But like I said, I don't really see, there's some news, but I don't see any like catastrophic news that could really affect the market on Monday. So that's why I feel Monday is kind of like a calm before the storm, but easily something could happen between our meeting now and tomorrow. But so far, not seeing anything. So, but looking into Tuesday, April 25th, we do have the building permits, as well as the CB Consumer Confidence Report for the month of April, as well as the new home sales report for the month of March. Now, it's important that as we're deciphering this stuff, we need to know the times, what time that the reports are going to be released, And when we're looking at on the website, it's going to default to the Eastern time zone. But when you're looking at on your on the application, it's going to default to your time zone. So it's important that you know if it's going to be released before the stock market opens, or right at when the market opens, or after the stock market opens. That way we can get our timings of things right, because there's different parts of the day that provide different types of volatility. And it's interesting, and you'll see this here as we're going over these, of how precise that our government and these guys schedule these to basically add more volatility to the day, because typically the first hour and the last hour of the stock market day is the most volatile times. So it's like they're pouring fuel on the fire, And so if they weren't trying to really, affect the market, they would do it, way before maybe the stock market opens, or even after the stock market opens, to try to avoid, manipulating or affecting the stock market, massively. But in this case, with this scheduled early in the morning, it is prime. I mean, it is the basically pouring fuel in the fire, making it more volatile. So again, building permits Tuesday, April 25th, we have a 9:30, and again, looking at this in the website, this is Eastern time zone. So the building permits is scheduled to be released right when the stock market opens, which is actually very, very rare. We don't see that. Normally it opens maybe 30 minutes, 1 hour, maybe a couple hours before the stock market opens, or maybe 30 minutes or 1 hour after the stock market opens. So this is very, very strange, but maybe it could be, maybe it's a glitch or something. Maybe it'll be updated. So it's important that we look at this stuff regularly on a daily basis in case of they do change something or add something, so not only do we want to look at it, on usually they have everything on there by now, by Sunday. They may miss like a forecast. So sometimes we may not have a forecast for the unemployment report or the crude oil inventory report, but it will come on there, maybe during pre-market. But it will be on there before the next stock market day opens. But it looks pretty good for now. But like I said, this is just kind of strange that this report is scheduled to be released exactly when the stock market opens. But to try to determine, will it provide bearish characteristics or bullish characteristics? That answer lies between the forecast and the previous. So most reports, we need the numbers to be higher than the previous for it to be bullish. If it's lower than, it would be bearish, unless if it's the crude oil inventory reports or the initial jobless claims, which is our unemployment report. These reports, we need those numbers down. If they're down, that means that it'll be bullish, instead of, like the other ones. So, but going back to the building permits, the forecast says that it's forecast to be released at around 1.413 million building permits that have been created, versus the previous report was 1.55 million. So this is basically saying that the economy is starting to slow down. People aren't building very many homes or buildings as much anymore. And so typically that's not good for the economy, though we could see, but we haven't seen this in the last couple of weeks, where bad news is good news. We occasionally we see that, and usually when we do, it's a little phase. It could last a week or a couple of weeks. But again, we have not seen that in the last couple of weeks. So lately, bad news has been bad news. And so ever since the China's getting more involved with this whole BRICS thing, trying to get away from the US dollar. Now, the United States government, trying to lower inflation, has been trying to slightly lower the US dollar. But with this whole BRICS thing, trying to do it more aggressively, that spooked investors in Wall Street, and that's where we've seen where now, bad news is bad news. So we need to continue that, unless unless further notice, but for now, this report is telling us to be prepared for bearish news on Tuesday, right when and you'll notice too, especially pre-market, before we even get close to the opening or this report, we'll most likely see bearish characteristics, and then this will hit, and then boom, the whole stock market will just drop. Unless if the stock market's green, then it's going to be the other way around. Then for some reason we know we're entering that bad news is good news phase. But for now, like I said, it has not been that way, and so we can assume and anticipate bearish characteristics that day. Now, going to the CB Consumer Confidence Report for the month of April. Now, the more rare that these reports are, the more volatile it's going to provide the stock market. So if it's a weekly report, it's going to provide a mild, effect. So if it's a monthly report like these guys, most of these guys, it's going to provide a very, a very good amount of volatility. But if it's a quarterly report, like we're going to see here Thursday, it's going to provide a massive amount of volatility. But a monthly report is still a very, very good amount of volatility. And we have two of them on Tuesday, 30 minutes after the stock market opens. So again, this is just pouring fuel in the fire, going to make a day even more volatile. The CB Consumer Confidence Report for the month of April is forecast to be a 104.0, where the previous report was 104.2. So again, this is also forecast to be slightly lower than the previous, which would provide bearish characteristics. Now, the new home sales, which is interesting because the used, or they call it existing home sales, have been going down month after month because of interest rates and being very high, and inflation. Homes values have been highly inflated. It just seems though the new home sales has gone up tremendously month after month because maybe it's more cost effective. People, if they're going to spend a lot of money on a new home, might as well get a brand new home, probably for a lot less money than a used existing home. So it only makes sense. However, this is the first time we've seen the forecast being less than the previous. So I think we're at that teeter-tottering point of maybe getting close to the full recession, which is really not going to be anything like our previous recessions that we've been in. But this is, like I said, this is kind of the first forecast where it's starting to decline. So we may now see a decline in both existing home sales, the building permits, and new home sales, all of the above. We're going to start seeing all that stuff trend down, and which we'll need to talk about the interest rate hikes here in just a minute. So don't let me forget about that. So yeah, both of those reports for Tuesday, everything looks bearish that day. Plus, both Tuesday and Thursdays are still a quantitative tightening day, you guys. If you don't know what quantitative tightening is, or QT, which if you're listening to Bloomberg or Yahoo Finance or something, if they say QT, that means quantitative tightening. That means the government is selling billions of dollars worth of stocks, and they're primarily scheduled for both Tuesday and Thursdays. And so up until I think a few more months, or once we get into like August, September, basically the full-on bull season, the bull market, that is when they're going to really slow down quantitative tightening, and the market is going to be very, very bullish. And so that's going to be great to kind of start getting into that phase. And later on, into the early recovery. So Wednesday, April 26th, we have two economic reports. One is the core durable goods orders for the month-over-month of March, and then we have the crude oil inventory levels. Now, if you don't know what these economic reports are, feel free to click on them a new page will appear, and with a couple paragraphs. The first paragraph tells you exactly what that report is, and then the bottom paragraph tells you how it will affect the stock market. So, for example, with this U.S. core durable goods orders month over month, it says the core durable goods orders measures the change in the total value of new orders for long-lasting manufactured goods, excluding transportation items, because aircraft orders are very volatile. The core number gives a better gauge of ordering trends. A higher reading indicates an increased manufacturing activity. A higher than expected reading should be taken as a positive or bullish for the US dollar, which affects the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar, which affects the stock market. And so, but because these are pretty, repetitive, like I said, we got weekly reports, monthly reports, quarterly reports, yearly reports. Eventually, you'll get them all down. You'll memorize them all. But if you haven't started, you got to start today. And able to get different results, you got to try something different. Otherwise, if you keep doing the same thing, you're going to get the same results. So, and that's why we come together here, and in that way, because the more we learn, the more we're going to earn. And so the core durable goods orders on Wednesday morning is scheduled to be released 1 hour before the stock market opens. The forecast is expected to be negative 0.2%, where the previous was down negative 0.1%. So the forecast is telling us be prepared for more bearish characteristics on Wednesday. So crude oil inventories is scheduled to be released 1 hour after the stock market opens. So right when the volatility maybe starts to kind of die down at 1 hour after, all of a sudden, bam! Again, we're pouring more fuel in the fire, increasing that volatility momentum. And however, we do see that the previous report was last week was down negative 4 million barrels, and typically, again, this report, we need these numbers down for it to be bullish. If they're up, it's going to be bearish, and so we're seeing it bounce back up. And so when crude oil inventories goes up, then that means people are not driving, they're not flying, they're not spending money, they're not going on vacations, they're not doing things that doesn't help the economy. It helps when it's down, people are consuming. That helps the economy. They're paying taxes and oil tax, gas tax, and whatever. And same thing with unemployment. If these numbers are down, people are working, they're spending money, paying taxes, all that kind of stuff. And so so Wednesday also looks bearish according to the economic reports. But easily, as we get into the earnings report here pretty soon, that could easily change different segments of the stock market, especially like, I think we're going to have some bank stocks Monday, so tomorrow morning. So we may see some extra volatility with some of the financial stocks. So it just depends on what earnings are kind of coming out. But we'll talk about that here in just a little bit. So Thursday, big day Thursday. This is a GDP report, a quarterly report. Quarterly report is very, very rare. We only get that obviously every 3 months. This is going to provide the most volatility out of the entire week is Thursday. And that can be a good thing, especially if you're in the stock options. I always recommend to straddle. Straddle is when you have both calls and puts on the same stock option, because and the reason why I always recommend straddling is because you can only lose what you have on one side, but your gains on the other side are potentially unlimited as long as you implement certain rules and guidelines to manage your risk ultimately. But the GDP basically, let me see if we'll click on it here. It'll kind of give us it's kind of technical description, but the gross domestic product measures the annualized change in the inflation-adjusted value of all goods and services produced by the economy. It is the broadest measure of the economic activity and the primary indicator of the economic or the economy's health. And so this is why it's going to provide a massive amount of volatility Thursday morning, 1 hour before the stock market opens, because it basically helps measure whether we are in a recession, how the inflation's doing. This is a huge key point that will help the politicians and our world leaders to determine, what to kind of do next when it comes to the interest rate hikes, how the economy is doing, and this and that. And so, so we have the previous report, which the previous reports have been pretty high. I think it'll kind of let us know what some of the previous reports have been, where we can see here the actual reports since the which has been kind of up and down. It looks like earlier in the in 2022, it was down quite a bit, and then inflation really hit, and it went up to during the third quarter of 22. We were in that 2.6, 2.9 to 3.2. So inflation, everything was pretty high. The economic growth and everything, as well as, it's interesting because even with some of the previous reports have been pretty low. But anyways, it is a forecast to have a pretty big drop, to going from 2.6 to 2.0. That's pretty, significant. And so, we should see a lot of, we should see bearish characteristics, because, even though a lot of people are looking forward to the inflation go down, that's good news for consumers, but not so much for industries. Industries have really enjoyed inflation being kind of high because their costs may have gone down over time, but they have not provided that to the consumers. So businesses have been able to profit very nicely with inflation. So if things start kind of coming down, we could see where they're not going to be as profitable as much. And so, but typically, we'll see a lot of corporations, they'll maintain, inflation and whatnot. But over, the next 10 years throughout, until we get to the next cycle, usually we'll see wages go up. So that way wages kind of come up. We don't see inflation so much come down until, again, in the next cycle, until we do all this again. And so, so Thursday, we also have the unemployment report, which is the initial jobless claims, is also saying that unemployment is going to continue to go up, which is bad. That is bad news. That should provide bearish characteristics. And for the longest time, the economy has been very strong, despite what the government is trying to do to lower inflation and whatnot. But all of a sudden, last week or the last couple of weeks, we saw unemployment go from like 200,000 every week to 245,000 now last week, and forecast to be even more. Now, typically when we see a big surge like this with unemployment or crude oil inventory levels, we see a little bounce, like it recovers a little bit, but we'll see what happens here. But the most important part is to analyze the forecast versus the previous, because that is what's going to provide the majority of investors in Wall Street a great idea of what the stock market is going to do that day. So we got to follow the majority. We got to follow kind of their footsteps and do what they're doing. And then going into the pending home sales, this is scheduled to be released 30 minutes after the stock market opens on Thursday. Again, this is going to be lower than the previous. So this forecast looks like it's going to be 0.3%, where the previous is 0.8%. So more bearish news that day, as well as the quantitative tightening, again, is both Tuesdays and Thursdays. So the government could execute their order to sell stocks during pre-market. They could sell anytime during the day or even after hours, even the last second after hours, making it look like it hasn't really affected that day. But what it does, if they do it during after hours, it softens the blow. So that way it kind of bleeds into the next day, but as it affects maybe pre-market, it absorbs a lot of that impact. So that way it's not going to be as bearish going into the next trading day. So for example, if they executed quantitative tightening or QT during after hours of Thursday, it'll bleed into Friday. But like I said, pre-market absorbs kind of that blow, that impact. So that way it's not going to be as volatile. So they have some pretty interesting tricks, which we're completely watching them, and we know what they do, and that's why we always want to look into these scheduled events. Now, I did want to talk about the interest rate hikes. So a lot of times you can just go to Google, investing.com, interest rates, and I don't know why it did that. Hold on here. Let's do investing.com, interest rates. So the point here is to look at the history of the interest rate hikes, but also looking forward at the interest rate hikes. That way we know what's going to happen before it happens. That's the goal of our stock market meeting here. And so the last interest rate hike was right here, March 22nd. It was 4.75, and they increased it. Well, the forecast was 5%, and it reached 5%. Well, we have another interest rate hike coming up pretty soon, here in a couple of weeks, on May 3rd. We don't have a forecast yet, but we'll probably see that possibly after that whole GDP report, because now the Feds will get together and be like, okay, what should we do now? Blah, blah, blah. Or so they can make a decision whether they go neutral, or they won't do any interest rate hikes, or they could say we got more work to do. We need to do more interest rate hikes. We need to crash the economy. But just look at this. We have 1, 2, 3, 4, 5, 6 more interest rate hikes before the end of this year. That is absolutely crazy. But like I said, they could go 0.25% each one, or maybe even more, or again, they could be neutral on some of them. Now, eventually, we're going to see what's called interest rate easing, as well as quantitative easing. I bet we're probably going to see both of that at the same time. So interest rate easing means that they're going to start lowering the interest rates, which I believe that'll probably take place sometime next year. Next year is going to be more or less kind of our economic recovery. And we'll also see what's called quantitative easing. But normally we'll see that when the stock market's down. So that could be during the next bear season, which is typically during the first quarter, which would be or around that. It could be it could start beginning usually at the end of November, the bear season, as well as December. And that kind of bleeds into January, and then things kind of get a little, maybe starts to kind of recover around February or March or so. But then once they start doing quantitative easing, that means that the government will start buying stocks, and they buy billions of dollars worth of stocks. However, this stuff is all scheduled. Everything has a date for it to happen. For example, right here, because the government uses the Federal Reserve Bank of New York for their bank accounts and financial activities and stuff. So when we go to certain areas of the website, we can kind of collect some information of what they post to the public. Now, they don't announce this kind of stuff, though it is a law and a rule that they have to release a lot of this information to the public, but they don't have to talk about it. The news, doesn't really talk about it. You're not going to hear YouTubers or anybody else really talk about it except for us. but every once in a while they kind of talk in code, where they say a QT, QE, blah, blah, blah. And a lot of times, if you just don't know what you're hearing, you're just not going to know. And so this is where we can get some very, very valuable information. So the schedule for the quantitative tightening. So for this week, again, we have Tuesday, the 25th and Thursday, the 27th. So we kind of have like a severity level here when we're looking at the dollar amounts of how much value in stocks that they plan on selling. So Tuesday, we have about $3 billion worth of stocks that the government plans to sell, which is not really a lot. Most investors can easily pour back a total of $3 billion back into the stock market and make it, and recover that. But when we start getting more in like 11,000, 15,000, or 11 billion or 15 billion dollars worth of stocks, that's a lot harder to try to recover. So you might as well just let it ride at that point, or go with the flow. For example, you never want to swim up a river, because it's just going to tire you out, and it'll be catastrophic. So when we go with the flow, we always follow the money. So if the market's going to be bearish, we bet against the market, using stock options, with puts. If the market goes down and you got puts, your account's going to go up, and tremendously. So this is where we can really take advantage of a lot of this highly valuable information. And so Friday, April 28th. So with the economic reports, we don't normally have these on a Monday or a Friday. They do happen from time to time, but we do have an economic report for this Friday, April 28th. We have the core PCE price index for the month over month of March. This report is also scheduled to be released 1 hour before the stock market opens, but the forecast shows at 0.3%, where the previous report was also 0.3%. So we can't really determine, will that provide bearish characteristics or bullish characteristics. It is a monthly report, so it should either way provide some kind of volatility, but it's like, I guess it's like a wild card, to be determined. I would straddle both calls and puts going into that day with a scheduled economic report during pre-market. So that is the gist of this week's scheduled economic reports. For the majority of it, it looks very, very bearish, especially with the quantitative tightening on Tuesdays and Thursdays. But also, I do want to remind you guys that looking into the president's schedule and the White House schedule can be almost as volatile as this, but that stuff is scheduled during power hour or during the evening, or it could be during the middle of the day. So again, this is the government's way to basically provide more fuel for the fire. We just need to know what's going to happen before it happens. And so this is the pre-market stuff, or during the morning activity. The president and the White House schedule, meaning like press conferences, or when Joe Biden talks, but this isn't, unfortunately, it's not scheduled weekly. This stuff is scheduled on a day-to-day basis, because, that kind of, politician side of things changes regularly on a daily basis. So, but this website, which is fact-based, using the Biden calendar area, it is updated every midnight at Eastern time, or 9 p.m. on the Pacific Coast time. So if you're on the West Coast, at least it gives those an advantage to be awake and to kind of look at the new schedule. So that way we know kind of what's going to happen before it happens. And so, for example, so looking at Friday, the little bluish green bar here says press briefing. That's the White House press conference. So it says it's scheduled to be to start about 1 p.m. and this is all Eastern time, where the White House is. So sometimes it'll just say the press briefing by the press secretary, blah blah blah. But we may or may not see anything to the right of it. Sometimes they'll have like a little subject of basically something that they really want to talk about. But if they don't have anything here, it's just kind of the general, daily activity. But ultimately, the press briefings is when journalists has their opportunity to ask questions. And these questions could be questions that can result in an answer we might not want to hear, that could also spook investors in Wall Street as well as the stock market, or maybe it's something that investors in Wall Street do want to hear that could help pump the market up. So the only way to kind of determine that is to listen in. And so we can always go to YouTube, type in White House Live, maybe 15 minutes before this time, because all of a sudden you'll see all these news companies that are prepped to for that briefing. That way you're not relying on other news applications, because once it says, oh, there's a White House briefing going on, it's been going on for 5, 10, 15 minutes. You're already behind. And so you're like, oh man, I didn't know that was going to happen. Well, don't be that guy. Don't be that person. Always know what's going to happen before it happens. That way we can be prepared. The pro traders say, always plan your trades and trade your plan. Benjamin Franklin used to say, if you fail to plan, you're planning to fail. That's not us. We do not fail because we always plan ahead. And so the other thing is always to look for the president. This is the kind of the key thing. The president delivers remarks. That is perfect. So, and most of the time, the stock market does not like the Biden administration. So it's usually hesitant. It's like, it's going to kind of panic. Once these guys start talking after 5, 10, 15 minutes, then the market starts to recover because they haven't said anything stupid. They haven't put their foot in their mouth. Or provided any information that could spook investors or Wall Street. So then now all of a sudden, since they haven't mentioned anything within that time frame, we'll start to see that the market starts to recover. So by putting a lot of this bits of information in place and utilizing things like moving averages with our graphs and charts, we can look at these buying and selling signals and get in and to get out. Just depends on what strategy you're using. So again, by utilizing this page, we always want to focus on, will there be a press conference at the White House, and will Joe Biden be talking? A lot of times there may be times where there's not scheduled to be anything. Well, that could be good because, we're not really, expecting them to talk. So we're not really going to get any kind of, power hour volatility, with big major swings. Maybe it could just be a gradual, incline going upwards, without any kind of, interference. So again, this is very, very important to know what's going to happen before the stock market closes is by utilizing this bit of information. So that way we get all of our bases covered. We got the morning pre-market activity schedule covered, and then we have our power hour activity scheduled. So it only makes sense to utilize both of this information. So going into the next bit of highly valuable information when it comes to volatility is our financial earnings. So, and I always post a lot of this information under our featured announcements area of our group. And so it's important to kind of start with the schedule first, which is down here. Is the here's the schedule for this week. It is a major week this week. So tomorrow we got Coca-Cola. They're going to be the big one for tomorrow morning. But tomorrow after close, look at this, you guys. The First Republic Bank. This is the first time we've ever, since I've created this group 5 years ago, we've never really analyzed First Republic Bank up until now, only because this whole financial crisis that's been going on. And so if you've seen their graphs and charts, they are down substantially. And so they're going to, all eyes are going to be on that bank tomorrow. I promise you. And then we have Cliffs which provides, I think, a lot of like metal materials, which we've been a shortage on, and so that's going to be a pretty big one. Tuesday morning we got Verizon, as well as UPS and General Motors, McDonald's, Halliburton, General Motors, 3M, a lot of big names on Tuesday, and then morning. But then Tuesday after close, we got Microsoft, we have Alphabet or Google, Enphase, Visa, and then Wednesday morning we have Boeing. And then after close, we got Facebook, Meta, Roku. Big names there. And then Thursday morning, before the stock market opens, we have American Airlines, and that is definitely going. I mean, a lot of these are going to affect a lot of segments of that particular stock. Like Facebook is going to affect all social media stocks. American Airlines is going to affect all airline stocks. And so it just depends on what goes on there. And then Thursday, after the stock market opens, we have Amazon, and then Intel, Snap, Cloudflare, and so on. Pinterest is usually been a pretty volatile one. And then Friday, it looks like we're getting into some energy stocks like ExxonMobil, Chevron, and so on. So let's take a look at the analysis that we have for these guys. So first one, Amazon. So as we've mentioned, Amazon is confirmed to release their earnings on Thursday after the stock market closes. It is expected that they will beat their financial earnings. Investors are bullish going into the earnings release with almost a 75% expecting an earnings beat. That is very, very strong. Typically, when we're looking at earnings in a normal world, normally they're right around 75% expecting an earnings beat. That is normal. Anything below that is kind of below normal. Anything above that is considered abnormal. And so this is abnormal because we're way over that average mark, up in that 75%. So when we're looking at it in another way, 75%, that means you have 3 out of 4 odds this guy is going to beat its earnings and the stock's going to go up. 25% chance it's going to go down. Our option traders are pricing in around a 7% price movement in either direction. And it's been a pretty volatile one before, where it has moved right around 9%, after earnings. So Amazon is going to be definitely on our watch list. Microsoft as well is also expected to beat their estimates. And they are confirmed to release their earnings on Tuesday after the stock market opens. Option traders are pricing in around a 4% price movement, which it normally moves, right around 3-4% after earnings. Normally, Microsoft, for some reason, always seems to miraculously, beat its earnings. Every great once in a while, it'll have a miss, here or there, which it had recently in the past. So I would definitely be expecting an earnings beat as well. And so next one is Meta, also known as Facebook, is also expected to beat their estimates. They're going to be releasing their earnings on Wednesday after the stock market opens. Option traders are pricing in right around a 9% price movement with Facebook. However, it's been even more volatile in the past, where it's moved right around 16% in recent quarters. Coca-Cola, which is also expected to beat their earnings. They are going to be releasing that on, tomorrow morning, Monday morning, before the stock market opens. Investors are bullish going into the company's earning release, but with a 65% expecting an earnings beat, which is average, like I've said. Price movement right around 2%, which is normal. Coca-Cola is not a big mover. But and then again, we have the First Republic Bank. Look, I put several more of these little red light specials on here, because First Republic Bank, again, is our first time we've ever really analyzed this, only because of the current situation going on with the financial segment. First Republic Bank is the ticker is SRC. They are scheduled to report on Monday after the stock market closes. Investors are very bearish going into the company's earning release, but with a 47% expecting an earnings beat. That's almost 50-50. I mean, this guy could really go either way. It could go up or down, but look at this, you guys. Option traders are pricing in a 28% price movement in either direction. So I mean, it can plunge 28%, or it can surge 28%. I'm thinking, as a lottery play, I'm thinking I'm going to straddle this one, because with that kind of big movement and straddling, this should be a win-win. The only reason why I call it a lottery play is in case if there was some kind of interference or some kind of manipulation and it doesn't move, then what happens with options, whether it's a call or a put, they will get what's called an IV crush. That means an implied volatility crush. Both calls and puts get crushed, meaning where they greatly depreciate because the price didn't move, because maybe it was interfered, or it just didn't move, and so both sides get crushed, and that's why it's usually recommended to avoid doing stock options with through earnings, because of the possibility of the implied volatility crush. Getting crushed is definitely no fun, and that's why if we're going to do it, we always go lightly, because this is a very high risk, high reward situation. But normally, if we're straddling, especially regularly, we want to do it on the non-earnings, or do it on things that are similar to the stock that has earnings. Like, for example, if American Airlines has earnings coming up, we want to do maybe like Delta or Alaska, or something else, because those are definitely going to be affected by the other stock. And so so just make sure this is on your watch list, because this is going to happen tomorrow, you guys. There's a lot of volatility on this one. Definitely going to be straddling that one. And then Verizon, which is also expected to beat their estimates. Their earnings report is scheduled to be on Tuesday morning before the stock market opens. Option traders are pricing in right around a 4% price movement in either direction. Next one is UPS. UPS is also expected to beat their estimates and is scheduled to release their earnings on Tuesday morning before the stock market opens. Option traders are pricing in right around a 5% price movement in either direction. Google, also known as Alphabet, is expected to beat their estimates and is confirmed to release their earnings on Tuesday after the stock market closes. Investors are not only bullish going into the company's earnings, but they also are anticipating around a 61% expecting an earnings beat. Option traders are pricing in right around a 5.5% price movement, maybe even up to 6%, as it has averaged 6% movement in recent quarters. Boeing, which is expected to beat their earnings on Wednesday before the stock market opens. Investors are bullish with Boeing, and it has almost a 63% expecting an earnings beat. Now, the reason why I put this image here is to remind you guys that not only does Boeing focus on commercial airlines, but they're also a defense stock. And especially with the activity that's going on with Ukraine, and and selling equipment to other countries, as well as giving Ukraine equipment and stuff. Our government has also recently announced increasing the military budget. What was it, like 30-40% more than what it normally is? That is significant, you guys. That's not like it's some little 3%, 5%, 30-40% increase in military budget. That is huge. And that money needs to go to defense companies or defense stocks, and one of them is going to be Boeing. And so option traders are pricing in right around like a almost 5% price movement in either direction, where normally averages right around 3-4%. So we're expecting a little bit more volatility coming out from Boeing this week. End phase, which is something we have analyzed before in the past. They're one of those like battery backup, type things, for your home, in case of like you get a power outage, your lithium ion battery pack that's in your garage is going to power your house for a very long time. It's going to power your hot water heater, your stove, your refrigerator, and your electronics for quite a while until the electricity comes back on. Or you can also utilize solar panels for it, so that way it charges it. And so, but Enphase Energy is expected to beat their estimates. Coming up this Tuesday after the stock market closes, investors are very bullish going into the company's earnings release, with an 88% expecting an earnings beat. That's like almost unheard of, you guys. Like I've mentioned before, 65% is usually average. Occasionally we may see 70, 75%, but 88%, that's almost a 90%, expecting an earnings beat. That's almost like 9 out of 10 odds this thing is going to beat its earnings. It's going to go up. Solar panels and this type of technology year after year is slowly gets improving. For the longest time, we've always seen, these advertisements for it, but, trying to locate a technician to install it was almost like mission impossible. It was very hard. Usually it's out of state. You don't have anybody in your state that's certified or whatever, because it's just so new. But year after year, it's improving more and more and more. And so, but that's only going to be good for these types of companies. And so, option traders are pricing in right around a 10% price movement in either direction, where normally it's moved right around 12 to 13% in previous quarters. But out of all of the financial earnings here, 88% has the highest percentage of expecting its earnings beat, but that First Republic Bank has the highest volatility out of all or any earnings report that's scheduled for this week. However, this is a kind of like a wild card. This is an extra bonus because this is number 11. We've had our top 10 financial earnings report here. This is like a freebie, an extra one, and this is a company that we have not ever analyzed yet up until now. So there's, for some reason, there's all eyes are going to be on this one. So I don't know. We'll have to do a little bit more due diligence on what's going on with this company. But obviously, we see here they're in the medical industry. They must maybe work with cancer, the segment, or tumors. It looks like some kind of robot that may do certain surgery procedures. That may be more precise compared to other equipment or surgeons. And so Accuray is confirmed to release their earnings on Wednesday after the stock market closes. Investors are bullish going into the company's earnings release, but expecting an inline results. Option traders are pricing in a 35% price movement in either direction, where normally it's average right around 12%. So we need, as for our homework, you guys, we need to look into Accuray, which is ARAY. We need to figure out more about this company. We need to learn about maybe have they released a new product that is going to be revolutionary. There's a reason why option traders are anticipating a 35% price movement in either direction, whether it be down, are they failing, or are they coming out with some latest and greatest technology? We need to do that, and so we'll look more into that. But also, investing.com every Sunday morning releases the top 5 things to watch in the market week ahead. So it's good for us to, as we do our weekend due diligence, to also look at this to see to make sure we haven't missed anything. So their main headline here says the United States data will be shed more light on the future path of interest rates, while the mega cap earnings will test this year's rally in tech stocks. European bank earnings will show the impact from last month's banking crisis. Eurozone data will inform the ECB's decision making, and the new JOB governor chairs his first policy meeting. So the first thing on investing.com on their kind of their priority list here is the United States data, which is what we've kind of went over. Again, it's just going to provide a massive amount of volatility, so we don't need to really get into that. Number two was the earnings reports, which is something that we already went over. And then number three is the European bank earnings. So obviously we're going to see some more activity with the banks this week, as some big name European banks are due to report their earnings in the coming week, like whatever this UBS is, the Shoot Bank and Santander. It's funny because we used to call it Santander, but now they try to make it fancy, Santander. It's weird, but anyway, so more bank, and then we have the Eurozone's GDP. So not only do we have our GDP this week, but it looks like the Eurozone is to release the advanced data on the first quarter GDP on Friday. So while April inflation reports from the region's largest economies like Germany, France, and Spain are due out the same day. So looks like we have a little bit more volatility to expect this coming Friday, as we've talked about how we do have one economic report. This will just help pour more fuel on the fire. And then number five, the new the BOG governor takes helm, and so, but that's going to provide a very mild effect on the market. But pretty much we went over everything that will have the biggest impact on the entire stock market. Let's take a look at some options activity that took place last Friday before close. And looking at the options activity for Friday before close.
Sorry, Carlos.
No worries.
Take you back. I may have missed Roku. Did you discuss Roku?
Roku did not make it on the top 10 list. For some reason, even though it has before, but obviously there's just so much activity scheduled to happen that Roku did not make the top 10, which kind of sucks, because again, it's always kind of been in the top 10, and we always had analysts analyze it for us, but again, there's just so many more other important ones that it just didn't make the list. I used to grab more information from another website provider called Anonymous Profit, but for some reason they went MIA, they went missing, and they closed the website, and I can't get more I can't get their analysis reports, because they just stopped. So if you guys ever have any other analysis out there, definitely let me know, so that way I can always sign up for that and provide it for you, because a lot of this information is premium material, and I don't mind paying for it and providing it to you guys at no charge. It's free. It just allows us to talk about it. But if I can get more info on Roku, I'll definitely share that later on today. But for now, this is what has been provided. But we can also look to see if there's any activity with Roku, and I don't see anything on our little scanner here that I call our radar, but that can easily change going into tomorrow. We can look into that, but also we can look at Roku individually with its most active calls and puts, utilizing the NASDAQ website. So let's do that. We'll put in Roku here in the NASDAQ website, see what it says. So, but again, a lot of this activity is from last Friday, and a lot of it's going to be expired or no longer valid. So we have to kind of decipher it a little bit to see what's still active and what's not. So Roku, which is down to $58 or down 1.5% last Friday, we see that we see a majority of the activity is going to be on the put side. So people are so far betting against Roku. We do see some calls activity, but it could be more day trade or whatnot, but they've all expired worthless. So there's really very, very little activity on calls, and it's more or less kind of on the on the put side. And so I'll check something else out here on my phone really quick, but I do have Roku on my watch list, or I thought I did, but we can also see overall what the overall volume. So last Friday, it looks like that, it's about 55% puts and 45% calls on Roku. But I believe that as we get into this coming week, we're going to see more puts activity on Roku. So I see that that investors are bearish with Roku. For the longest, I started trading Roku when it was right around $20 a share. And now here it is, $58 a share. But not that long ago, it was like hundreds of dollars a share. But that was when when the government shut down the economy, and everybody was kind of forced to watch TV, play video games. And so Roku did very, very well. But at the same time, Amazon is trying to get more and more involved with the Fire Stick and their platform. So there's a lot of TVs now that are coming out with that Amazon platform. So Roku has more competitors. And so Roku is not as profitable as what it used to be. So their their market capital is obviously going to come down. But we'll have to take a look, especially with what investors are going to do, because I'm pretty sure that we're going to see a lot of options activity right beforehand. So to be determined. But but so Friday, the top three have been pretty much, and they're always pretty much the Tesla, Amazon, and Apple. Tesla really dominated the options activity with 2.6 million in options volume, with a call and put ratio right around 50-50. So they're not taking any chances going into Monday. They're going to have both 50% calls and 50% puts, because if we get some massive volatility with Tesla, like I said, you can only lose what you have on one side, but your gains on the other side are going to be potentially unlimited. And when straddling, it gives us something to work with, because we can buy and sell at different times. So it doesn't matter if the stock market surges straight up or plunges straight down. It gives us something to work with. That way we can maximize our gains on one side while minimizing our losses on the other side. And sometimes we can turn that loss on the other side into a gain, so we can gain on both sides. Like, for example, let's say if Tesla opens in the red, we can sell our puts, hold on to the calls. That way we can minimize the loss there, or potentially turn that into a gain. And all of a sudden, Tesla goes from the red into the green, and now we secured our gains in the puts, and now we can secure our gains in the calls, and now we just profit on both sides by utilizing moving averages. And so this is why we see a lot of this activity, because we're seeing straddling activity. And so Amazon, which was up 3%, really kind of was flying underneath the radar last Friday. We have 1.7 million in options volume, but we have a 72% call ratio and a 27% put ratio. So, a lot of investors are very bullish with Amazon going into Monday, and that can kind of provide us some optimism that Monday could potentially be a bullish day. Because again, we always got to follow the money, and like I said before, that can mean a lot of different things. But if we're following the money, and if a majority of this is calls, then investors are very bullish going into the next day. Or if it's 50-50, that means they don't know. They're betting on both sides evenly, and they're just going to work with that. But if we're going to see a majority of puts, then obviously investors in Wall Street and everybody else are very bearish going into the next day. So this is a very, very important guide to determine where are people putting their money. And so rather than talking to people and thinking, what do you think? What's your gut telling you? Whatever, that a lot of people are using the hope system. We don't use the hope system, though, we might want to, but we need to focus more on analytics, more statistically and based on a process. And so, and this is part of our process. And so Apple, which has about 1 million options in or million volume in the or options volume, we have almost a 55% call ratio and a 45% put ratio. However, NVIDIA made it fourth place, even though they were kind of at a wash that day. But we have about almost a 56% put ratio and a 44% call ratio. For some reason, people are very seem to be a little more bearish with NVIDIA than they are bullish. Now, every once in a while, we will see some very, very unusual activity on this, which I call our radar, which is our scanner or screener. But when we're looking at it regularly, we regularly see things here. Or if something comes up that's not normally on here, it stands out like a sore thumb. We have Stellantis. Stellantis is never, ever on this list whatsoever. Now all of a sudden they are. Why are they on this list? And there's no movement. So something could be happening before it happens, like insider trading information or trading info or activity. But look at this. We have almost a 500,000 in options volume, which Stellantis again never has volume. And out of this, we have almost a nearly 99% call ratio. That means people are betting that Stellantis is going to go up for some reason. Why is it going to go up? So again, this is going to be added to our radar. We got to put this on our watch list because something big is going to happen with Stellantis. So you asked, what is Stellantis? Stellantis is I believe it's an Italian company or a European company that owns or has a partnership with Fiat. Fiat Automotive Company also owns Chrysler, Dodge, Jeep, and Ram. You guys have seen any recent news with what's going on there? They just revealed or released to the dealerships the all-electric Ram pickup truck. And so I don't know if they've yet released it to the public, but they've released some info to the public, but I don't know if they did a full-on review. But this truck, I mean, it's definitely a concept truck, but out of all the trucks, the EV trucks, most of them have between a 200-mile range to 300-mile range. Well, Chevy Silverado, when they announced theirs several months ago, it had a 400-mile range. The Ram truck has a 500-mile range. Now the truck enthusiasts are like, okay, now we're getting somewhere, because when you're towing, let's say 10,000 pounds with a truck, even if it's a gas truck, you're losing half of your range. And the same thing is going to happen with an electric truck. You're going to lose half of your range. So if you got a 200-mile range truck and you're towing, now it turns into a 100-mile range. Truck enthusiasts don't want that. They don't want to have to stop every hour somewhere to charge for 5, 10, 20 minutes or so. And so, but if you have, like the Chevy or even a 300-mile range, that means now your range is 150. Or with the Chevy Silverado, 400-mile range now turns into 200-mile range. That's getting better. But with a 500-mile range, but when towing, you're at 250-mile range. Now you can drive for 3-4 hours without having to stop. 3-4 hours, you need to stop and kind of stretch out, charge, and maybe get a drink, use the bathroom, yada yada. Now they're on to something. So, and I don't know if that may be kind of what's going on here, but I have not yet seen where they're taking reservations yet. They didn't really do, like the whole thing, like the Ford Motor Company, Elon Musk with Tesla is doing, where they reveal it to the public. And then they say, now you can go to Tesla.com or Ford.com and reserve your Lightning or your Cybertruck or whatever, So if Stellantis does that with Chrysler, Dodge, Jeep, with that will allow them to to manipulate their numbers. That way they can say, oh, we've had all, hundreds of thousands of reservations and blah, blah, blah. And now investors will be like, dude, we need to invest in this company now. And so, but we need to do more homework on what's going on with Stellantis, because again, Stellantis is never, ever on this page. And for some reason, it made it on here with no activity. And like I said, with a very unusual, almost 99% call ratio, they are all betting that this stock is going to go up. So let's look into the, let's go to NASDAQ really quick as we do our due diligence. Let's look at what people are buying and with what expiration date. Always look ahead, look in the future, what is going on. So calls, look at this amount of calls, you guys. Look at not just the one strike price, $12.50. Where is it at here? That's weird. So we had a $17.68 share price, but we have a $12.50 call strike price, which is very, very weird. And I've always thought about, why do people buy way in the money like that? Well, look at the cost of it. We're at 5.2, times 100, so, so basically this is, for each cost of this is like $5,000. And so, that's going to be very, very expensive, but it allows like kind of more the rich and the wealthy to buy a lot of these for a higher dollar amount, but keeping the amount of contracts lower. It kind of reminds me of like high rollers. Like if you go to the casino, you have a high roller area, that way they can put more money down and maybe have less chips, and so that's where we see high roller activity here, because the strike prices are way below the share price. So they're working with more money and less contracts. And also it also kind of prevents less less contracts, because if they were buying in the money, it would be millions of options volume, and it would really look obvious that something weird is going on there. But making it fifth place on the list, I mean, that's pretty unusual, right now, and I'm glad that we caught that. But again, we have a tremendous amount of volume that does exceed the open interest. With open interest, if you don't know what open interest is, don't know options, blah blah blah. Open interest is basically people buying that particular strike price, but have not yet sold prior to this day. So that means, so volume is always the current day's buying and selling activity. But sometimes we don't always know, is it more buying activity, is it more selling activity, or kind of a blend 50-50? But by comparing the volume with the open interest, because the open interest is the previous days, shows how many people are still holding that. But if the volume exceeds the open interest, then that means it is pure buying activity that's going to accumulate. Versus if it was the other way around, if the volume was less than the open interest, we don't know if that is, it could be a blend of both buying and selling activity, or maybe it's all selling activity. Maybe they're selling it and getting rid of it and buying the calls. But for right now, we see a tremendous amount of activity on the calls. I just wish we had like a strike price, like $20, $30, $50, or something like that. So it doesn't give us any clues of where they believe it's going to go, but at least we have clues that they do believe it's going to go up.
So I had a question. Can you hear me?
Yeah, I can hear you.
So I was looking at the daily chart on that. It looks like it gaps up and down quite a bit. What does that mean? And does that like concern you a little bit?
Let's take a look, because we have not looked at that yet. Close my there. Let's go 3 months. Let's get rid of the That's, so yeah, so we're just seeing volatility, which is, it's ranging, between what the $17 and $19. We can see that where it's at now, it's getting ready to provide a buying signal. If we're looking at moving averages, the buying signal is when the price line cuts up through the moving average lines. And then we have what's called a crossover signal, is when the moving average lines crosses over each other. That is either our selling signal or our buying signal. And it's getting ready to do that now, which also gives us more clues on this whole options activity thing. As people are getting ready to bet that the stock is going to go up, we're seeing that it has not yet provided a buying signal, but for some reason, investors want to buy while it's low. And because they want to take advantage of whatever's going to happen soon. It may not have hit the news yet, but that is one of the reasons why us pro traders say to buy on rumor and sell on news, because once it does hit the news, then the price is going to be up here, and then it's going to be too late when your cost could have been more around that $17 range rather than $19. And that's why we like to look at unusual activity and activity in general, as well as these charts and stuff, to kind of see where things are. And usually, like, those guys, like insider information, insider trading, they always know kind of like what's going to happen well before things happen. And and we occasionally see this kind of activity with certain situations, as well as like the time when GameStop and AMC surged like crazy. We saw a lot of this kind of stuff, unusual activity where it's not normally on this list, and then all of a sudden it had this crazy high percentage ratio, and then just slowly it started to appreciate, and then boom, something just catastrophic happens, and it just surges like crazy. Not saying that that's going to happen with Stellantis, but something big is going to happen that hasn't happened yet. So we definitely need to make sure, absolutely sure, that Stellantis is going to be on our watch list. Another cool thing too that you can utilize. This doesn't really have anything to do with our meeting or anything, but if you go to Google and you type in, let's say, automotive market cap, we should find a Google document. This is the top 25 automakers by market cap. And this page updates while the stock market's open. And what it is, it's like a spreadsheet. It shows who the top automotive company is, sorted out by the highest market cap. With the stock market in the US, billions of dollars. So Tesla being number one, which had never been number one up until several years ago. Toyota has always been number one. But Tesla was finally able to pull some strings and make it through, and they are now the number one highest market capital automotive company in the world. But we can see that they're up there, and as well as other companies. Well, Stellantis is now number 8 in the world. And they're slowly appreciating as they're getting more involved. We can see that now the country-wise are a multi-international company, because we got several partners involved in the company, and many brands. You have all the brands right here: Alfa Romeo, Chrysler, and so on, Dodge, Fiat, Jeep, whatever that is. What is that? Maserati, Opel, Ram, and so on. So I mean, you got a lot of different bits and pieces of technology going on there. They got a market in Europe. They got a market in the United States, and so on. So this is a big company, and like I said, they got some things in the works, for all sorts of companies. So it's definitely a good page to kind of glance at every once in a while, just to see who's positioned where in the top 25. So next one is Alphabet or Google on the options activity list. Google, which is normally on this list, but they're normally maybe more in the middle or down below. But as we're approaching more of the earnings season, we're going to see it kind of make it up closer to the top of the list. However, Google has a 75% calls ratio with less than a 25% put ratio going into Monday. So it really helps provide us more clues if Monday is going to be bearish or bullish. So far, it's looking like Monday is going to be more bullish than bearish. AMC, which is another manipulated stock, as we talked about, the like GameStop and AMC and a lot of those other things. AMC is getting closer back to where it was before it was manipulated. And so, but AMC is up about 0.5% Friday, but most people are still betting against AMC. We got about 57% put ratio and just under 43% call ratio. So most investors are bearish for AMC. And then we have Meta, formerly known as Facebook, which closed kind of evenly last Friday, but we have a 60% call ratio right at close. So a lot of investors going into Monday and throughout the weekend are bullish for Meta. And then AMD, which was down Friday, we have almost a 58% call ratio and a 42% put ratio. So still, investors are bullish going into Monday and throughout the weekend on AMD. On that as which is kind of interesting because Nvidia investors were bearish. So normally they kind of go hand in hand. Alibaba, which is like a China's version of Amazon, they were down Friday, but we have a 65% call ratio for Alibaba and a 35% put ratio. Microsoft is right there. We got almost a 59% call ratio, so that looks good. Coinbase, Coinbase had 58% put ratio, so that's a little bearish. Bank of America, 59%. Going into the weekend and Monday, almost 60% calls on Bank of America. So that's pretty strong like bull. Netflix, which is kind of 50-50. Investors are like, I don't know. And Roku will, affect a lot of these streaming stocks like, Netflix and Disney Plus and whatnot. So, if we kind of look at Roku's their ratio when we go into next week, as well as some of these streaming services, that's really going to help provide us a lot of clues. The other Alphabet looks pretty bullish, as well as AT&T. Lyft is right here. It's not always on this list. Usually sometimes we'll see Uber but we do see it here. But Lyft has almost an 80% call ratio. Lyft was up 6%, but going into the weekend Monday, a lot of people are very bullish with Lyft for some reason, where Uber is right around 50-50. Now, here we have First Republic Bank, as we've talked about how volatile that's going to be Monday after close, after they release their financial earnings. We had a 60% call ratio. So for some reason, investors are bullish. But, maybe the whole thing has been manipulated, for financial gains. I mean, they are down tremendously, you guys. I mean, just to show you, for example, let's take a look at that stock here, if I can get things going here. FRC, First Republic Bank. So this is kind of we're on a monthly chart here. So this stock had just peaked like $147 a year ago, or no, where are we at here? Just several months ago, not a year ago. So just in February, this stock, First Republic Bank, was $147 last February, and then the whole issue in March had caused it to plunge down as low as $12. And so this is what you call a falling knife pattern, where the stock just plunges, falling knife. You don't want to catch it until it falls, and then we got to see kind of what happens. Well, it's been kind of ranging here on the bottom for the last month. So the last 30 days, it's been on the bottom, $12, $13. Now we're in that $14 range, so we could start to see some uptrending, typically, when we see something like this, we see it gap up, halfway. So if it was to recover halfway, that means it should reach around the, that $60 range, $60, $70 range from there. And that could happen, sooner than later. But as long as, the company isn't really in any massive jeopardy, or maybe they get bought, or maybe they get a partnership, or, just something, that can help, recover it. But again, this stock is going to be, on everyone's watch list. It's going to be on the news. But by focusing on the activity overall, Friday, it was up almost 3%. And out of this options activity of 200,000 options volume, we see 60% are betting the stock's going to go up, and less than 40% are betting against it. So let's take a look at the NASDAQ's options activity on it really quick and see what people are doing. FRC is the ticker name, and we do see a lot more calls activity than we do the puts activity, but we do see kind of a, like a good blend. One is not, significantly heavier than the other, but, a decent amount. Now, again, the price, which is at $14 a share, we do see, look at this, $60 call strike price, just what we were talking about. And I have not seen this yet because I'm doing this kind of on the fly with you guys. $60 call strike price. Let's take a look at the expiration date. Expiration date, which, my goodness, I was thinking that this would be maybe like 6 months from now or a year from now, but I was not thinking this is this coming Friday. I mean, can you imagine going from where it is now to $60 in a short period of time? My goodness, this is going to be a very insane stock. But we have other strike prices that are more feasible. One which is close to the money is this $15 strike price. Which is usually what I would recommend. Always stay at the money, or maybe a little within the money. And the reason why is because it helps minimize a time decay or depreciation. But man, this is very, very interesting to see if it even surges back up there and gaps halfway. It looks like people are starting to bet that that's what's going to happen. But we do have some other strike prices that are within the money, like the $14, $14.5. But we also have a $25 strike price. Let's take a look at its expiration date. Is also this Friday. Oh man, we're going to see some crazy volatility with this stock. There's a $20, yeah, 17, another 20, and so on. But we also have some puts, but this one is obviously expired because point. Let's just double check. $5 strike price. No, it's not expired. It does expire this Friday, so we do have a $5 strike price with a volume of 12,000. Versus some of these other ones, which all have the same expiration date, but by accumulating them, it really exceeds the this bearish anticipation. So, but either way, we should see some massive volatility with this particular stock. Let's take a look at the 5-day. Yeah, you can see with the 5-day that and this may be a pattern developing here. I have to kind of refresh my memory of what pattern that might be here. Let me take a look at my cheat sheet. If you don't have a patterns cheat sheet, definitely let me know, and I'll send it to you. Because and patterns aren't always dependable because they can easily be intercepted by certain news and other activity. But I'm trying to find a pattern where, so this is basically what's called a bilateral pattern. A bilateral pattern is where it could go either way. This is a the bilateral pattern, which is called the ascending triangle. The ascending triangle is where the price line comes up, kind of zigzags, but we have this point here where it's flat. It keeps touching the top part, but the bottom part, the lower areas are getting higher. So the lows are getting higher. And once it gets to a certain point up here, which would be the earnings, is when it's either going to surge straight up or it's going to plunge straight down. And so, but it's a 50-50 chance. That's what a bilateral pattern is. It's going to be one or the other. It's 50-50, but this is obviously, it's the ascending triangle pattern. And so it just depends on whatever it does, it's going to continue. If it goes down, it's going to keep going down. If it goes up, it's going to keep going up. So once it picks a direction, we ride that direction. Unless we want to straddle, that could be a great lottery play where we both bet a stock goes up and down at the same time. That way we can take advantage of either situation. What else is going on here? And then, so let's take a look at the Friday's option volume leaders. So that way we can kind of see what individual calls and puts have been active. Now, I do see in the chat room there, it says, I need the pattern cheat sheet. Can you send it to you? Yeah, I'll send it to you here in just a little bit here. So just hang tight there, Jacqueline. So the top activity that we're seeing, and so when we're looking at this page during this time, we need to avoid anything that's been expired, or looking at the DTE, which is the days until the option expires, avoid the zeros. So looking at things that are still current, we see that we have a Tesla put and a Tesla call. So this is obviously straddling activity going into the weekend. They're straddling, they're holding on both calls and puts, not taking any chances and working with whatever the market provides. And so next one is Lyft, as we're just talking about Lyft and Uber. Lyft is currently at $10.44 a share. We have a $12.50 strike price that expires in a month from now. So by May 19th, investors are betting that Lyft is going to get up there in that $12 range. Now, even if you're not into options or don't want to be into options, at this point, this is where this options activity can be very, very valuable and essential for you when it comes to following the money or to looking for stocks to invest into. Because if you buy shares of Lyft at $10.44 and it gets to $12.50 a share, especially in 1 month, just by holding the shares, you just gain 20% from this highly valuable information. And it could be a stock. You could find a stock that provides, not only is it going to provide you appreciation, but it could also provide you dividends. So if you find a dividend stock utilizing this method, not only are they going to pay you every 3 months, but you're holding on to an appreciating asset. I don't think Lyft pays dividends, but at least this is a great example to use on how to find stocks to invest in, because as we follow the money, with this particular strike price, we have over 55% in options volume, which exceeds the open interest, which again is the total number of open option contracts that have been traded but not yet liquidated via offsetting trades, meaning where people bought it beforehand and they're holding on to it now. And now this shows people are buying even more, betting that Lyft is going to go up. And so this is, again, highly valuable information. Then Amazon, we have Amazon, which is currently just under $107 a share. We have a $110 call strike price that is set to expire this Friday. And so there's some other ones in here as well that are still active, like a 106, 105. These are already in the money, but people are focusing on the $110 strike price because they're believing that that's the next price that Amazon's going to reach by the end of this week. So we could see activity where people are betting in the money as well as betting out of the money, but they're all very, very bullish for Amazon. But we do see $170 strike price for Tesla, so that's good. So Tesla had greatly plunged the other day. Now, yeah, I mean they slightly missed their earnings and revenue, but they were on the verge of kind of recovering a little bit. But what really did it was that whole rocket that exploded, and it's interesting because I tried sending it to you guys the live video. Because it's important when these types of activity happens, it's so important to watch things live because it will affect the stock market either instantly or within the hour. And and I'm watching it live, and all of a sudden the rocket starts to spiral in the sky, and I'm like, I know it's not supposed to do that. And all of a sudden, poof, it exploded. And I tried to alert you guys that that rocket just exploded. And some of you guys were like questioning, oh no, I don't know, that is this fake news, blah blah blah. I'm like, no, dude, it's like this just happened like seconds ago. I'm like, it's and Tesla stock was trying to recover, but when that stock the rocket blew up, it took a little bit of time for the Tesla stock to plunge. It took like I think 5, 10, 15 minutes for the news companies some news companies actually release something, but we started seeing more news alerts about 30 minutes to an hour after that rocket blew. And so that is extremely imperative why we always look at, watch live events. And so some of the other things that are on this list here, let's take a look here. More Amazon, Amazon, Google. We got some Google activity and so on. So pretty much, the top guys are on here. So another trick that's really important to look at when looking at this particular page is to now sort everything by open interest. Now, when we click open interest, it'll sort it out with what's currently on the page, but we need to refresh the browser. And what it'll do is it'll refresh the entire system by open interest. So now look at this open interest activity, and very rare do we see anything that will be expired at this point, because open interest is showing what people are currently holding on to. Now, the first one with the highest open interest out of the entire stock options activity is this ATVI. That's Activision. Obviously they're a video game, software developing company, which currently their share price is at $85 a share. But for some reason, people are betting against Activision. $85 strike price, so it's almost at the money. The expiration date is almost a year from now, from next January 19th of 2024. So people are betting against it for some reason, but not a whole lot of volume activity. So people are kind of have already bought, and they're holding, waiting to maybe see what happens. Maybe there's an earnings thing coming on soon that they're not going to do well. I mean, who knows? But for some reason, people are betting against Activision and are pretty holding on to it. AMC, we have a $3 put strike price. If you're one of those AMC enthusiasts, you gotta stop, because this AMC used to be like a $3 a share price before it was manipulated. Those days are done, and it's going to get back there. And we've been watching it after our stock market meeting. After stock market meeting, this price just gets lower and lower, and eventually it'll get back there. And so, but people are betting that AMC is going to reach $3 by next June, in middle of June. And so and it's been kind of slowly kind of getting down, downtrending, and so not looking good for that. And so now we have American Airlines is one of the other ones that we've always talked about. We always look at it ever since it was like around $20 a share. A lot of people have been betting against it. Now we're down at the $13 a share. Last meeting it was like $14 a share. Last meeting before that was like $15 a share. Last meeting before that was like $16 a share. Next meeting, we're going to talk about it. It's going to be $12 a share. I don't understand it. I mean, I just was flying American Airlines several weeks ago, went to Cancun, Mexico, had a blast, and they were busy. So I don't know why people are betting against American Airlines. If they're forecasting maybe pilots are retiring or something. I don't get it. But again, we always follow the money, and that way, because we leave our emotions out of it. If we get our emotions involved, that's when bad things are going to happen, because then we're going to make decisions based on emotions rather than statistics and analytics and our process. And so and so we always follow money. That's one of our process. And so people are betting against it and have been betting against it all year long. And so and they will be for the rest of the year for some reason. So next one is Nikola, which has had some issues before in the past, legal issues. They are an electric vehicle manufacturer here in the United States, and but some of the issues they've had, I think, had to do with fraud or manipulation or something like that. And so, but that's expired, so we don't need to really look at that one. See if there's any other Nikolas. But Nikola could eventually recover and get on the bandwagon on actually producing very good high quality electric vehicles. And if they do, we could see Nikola, or even like stocks like Mullen do very well. But obviously these guys need to they need to get their feet off the ground first. And so, but kind of to be determined, but both Nikola and Mullen are going to be some great stocks that we need to just kind of keep on the back burner watch list in case something big happens with the companies, that we are ready and prepared. So we have more AMC puts there. Vail. So we have a Vail, which is currently at $14.27. We had a $20 call strike price. And again, if you bought shares of that at $14 and it gets to $20 next January 19th, you just gain like 30-40%. And so that's huge. And so and then Bank of America, which is currently at $29.87, we have a $35 call strike price. And we've talked about in our previous meetings about the stock market cycle and the economic cycle that really helps provide us what stocks that we need to buy, what type of stocks we need to sell. And usually during the market bottom, when I announced that we were at the market bottom several months ago, that is the time that we need to sell energy stocks and to buy technology stocks and financial stocks. Because technology stocks and finance stocks like banks have reached their bottom. They're at the lowest point, and we need to jump on those and ride the wave up. Then after the summer, like during the fall season, we need to get out of the finance stocks and technology stocks and get into stocks that have reached their low point, which will typically be energy stocks, maybe like other materials, like lumber or like Home Depot, because we may have gotten into like the hurricane seasons, things like that. And usually like stocks, lumber materials, building materials, stores like Home Depot, Lowe's do very, very well, as well as materials like metal materials like gold, silver, things like that are usually kind of at their lowest point. We need to get into those. That way we can trend upwards with that once those start to really kick in and showing progress, while the technology stocks and finance stocks are dipping down. Then we do the same cycle over and over again. So every like 6 to 9 months, we get into technology stocks, finance stocks, get out of those. In the next 3 or 6 months, we get into the energy stocks and other materials. So, but Bank of America is one of those stocks that are, and when it comes to these financial, the crisis stuff, to me, this is a time where the banks have a time where I call sink or swim, and usually the big banks usually swim. The little guys are the ones that sink and usually need help. They'll either get bought out by the big banks, or maybe they'll go bankrupt or something. But usually it's good for the bigger banks, because it just helps, it builds them up. And so but Bank of America, I believe, also pays a dividend. So if you even bought Bank of America at less than $30 and it appreciates, not only are you gaining from that appreciation, but they're going to pay you a dividend every 3 months. And so working our way down, we do see Ford Motor Company not doing very well, but Ford Motor Company is building mega factories, I think 1 or 2 more around the country. And we see what that does when Elon Musk does it. If you build it, they will come, but it also increases their market value. And so once Ford finishes that in several years, their market share is going to go up a lot. And so it just reached $25 a share right before Russia invaded Ukraine. And so if it can easily reach $25 a share, it can easily get back there again. And so but right now it looks like people are kind of holding on to some puts. They could be kind of selling some of them here and there, waiting for some kind of indication that Ford's ready to begin trending upwards again. The automotive industry is very, very weird. Ever since we've seen this shortage, and when the government shut down the economy, and then there was a kind of a shortage because people were buying things, manufacturers weren't really building anything, and then so we had a short supply with a high demand, and that's when the inflation happened. But a lot of these companies are like, we like this shortage because it maintains the value. They don't want to go back. They like the short supply, high demand, because people are paying more money for things. So these companies, can generate more revenue if they don't flood the market. And so their costs may go down on things as inflation goes down, but they're not lowering prices. And so, so they're generating more revenue, making the companies more profitable. But that's not good for consumers. So then now the consumers are now relying on higher wages to make up for the difference, because inflation isn't really going down. So, but again, this is a cycle that happens every 10 years that repeats itself, that we can guarantee it will happen again in another 10 years. But it's just a cycle that we have to be ready for. We got to know about it. That way we know what happens before it happens. And so so there's another put here for the Activision. We talked about that. AMC. We got a put that's in the money, that's very, very valuable for the high rollers. And then we got another Nikola put. Those are expired. Activision. We do have a call for Activision, $95 call strike price that also expires in a year. So that could possibly be some straddling activity, a long straddle activity for Activision, waiting to see what happens, but betting it goes up and down at the same time. We got some more calls on Bank of America, EMC put, a Bank of America put. So just in case, a little insurance there, just in case, but majority we're seeing calls on Bank of America, EMC, and then PBR, we got to put there. So we're definitely seeing some great information on the options activity. Other than that, I think that's all that I have. Anything else? You guys have any questions? Anything else you wanted to provide? Anything that we may have missed? Are you guys pretty good, ready to rock and roll for the week? Jacqueline, I'll also send you the patterns cheat sheet in the chat rooms. I'll just blast in all of them that way, because I don't know which one that you're in. Can also get the pattern cheat sheet. Yeah. So I'll send it to you as well, and that way you'll have them. I'll have them uploaded. I'll upload it in our featured announcements area as well as all of our chat rooms. That way it's just really, really easy for you guys to gain access to. If you guys don't have any questions or comments?
Where are you? Sorry.
No worries.
I was wondering, where are you at on Tesla long-term and short-term? I know he slashed prices, and I think that cut into their margins, and that's why they dipped a little bit. But do you think that was kind of to gain more market share in the EV sector?
I believe so. I mean, now it's even though it's interesting that that Tesla's they didn't beat their revenue or their estimate. I think the bar was set up pretty high, so I think the company was kind of set up for that anyways. Because even though Tesla still has record-breaking sales and deliveries and this and that and whatnot, so they're a very strong company. And Elon Musk is he knows how to recover. And so, but he's got a lot of plans in store for the company. And he even mentioned several weeks ago or several months ago that he said eventually Tesla will be the most valuable company in the world. And people just don't know whether that'll ever happen or not, or if he's just saying it, or just talking smack or whatever. But what if he's right? He may have some things in the pipeline that could easily get him there, and that could be well, one of the things that he mentioned recently too is that he wants to offer more models of Tesla vehicles than what he currently has, but he also wants to be able to offer a $25,000 electric vehicle. Can't imagine how small that's probably going to be. It's probably going to be like a subcompact car, but they don't have it yet. But if they offer that, nobody else offers an all-electric vehicle other than what the Nissan Leaf. I can't remember how much that, but usually the Nissan Leaf has a range of 100 miles, maybe 120 or so on a warm day. But you get on a cold day, and those Nissan Leafs, their range is like 60, 70-mile range on a full charge. But if we can get, a 200-mile range, 300-mile range, maybe out of this $25,000-$30,000 all-electric vehicle, now, we're innovating now. Now we're, people, they're going to get a lot more sales out of that versus a Model 3, which is right around 40, something $1,000. 25,000. I mean, now it becomes more affordable. So now people can order that, they can buy that. And that's going to greatly help Elon Musk and Tesla's sales and delivery reports and the reservations. They'll continue to say, "Oh, we've had record-breaking, numbers, blah blah blah," and people are going to be like, "Oh, we got to invest into Tesla, blah blah blah," and that's really going to help their market share at that point. Now, I'm going to point this out too. Hopefully, you're still seeing my screen. That Tesla and Elon Musk plans to mass produce this Tesla robot by the millions. And one day we're going to see that he's going to get to a certain point where people can reserve this robot. And that is also going to help manipulate their stock value because they're offering something that nobody else is able to offer to the general public. As well as industries, commercial industries. This robot is designed to do basic tasks that could even be pretty repetitive, whether you're at the workplace, moving things around, boxes, mail, or whatever, or doing things maybe around the house. It could, but eventually it's gonna be like a science fiction movie where they'll be more they'll be able to do more, they'll be capable of doing more. But so far there's statistics are showing that it should be right around 5'8". Should be able to carry right around 45 pounds. It should weigh right around 125 pounds. Deadlift is 150 pounds. Speed could be able to walk up to 5 miles an hour. Arm extend lift about 10 pounds. And so, but this is an older design. Last year we saw kind of their new design. And they still have more work to do, but we could easily see a massive progression with this. It's going to happen, you guys. It's inevitable that it's going to happen sooner or later. And it's going to greatly help the Tesla stock reach new higher levels, because like I said, he wants to mass produce it by the millions. And if each one costs $10,000, $15,000, or whatever, whatever it's going to be, that's going to provide the company a massive amount of revenue. But also the other thing that they're working on is Neuralink. I can't imagine this really getting far. In fact, our government just recently announced that they told him, "Oh, Elon, you can't do human trials on this." Well, how is he supposed to progress with this Neuralink if they can't do human trials on it? So I don't know. I mean, it's interesting. It's like out of a science fiction movie, hooking up like a computer system to your brain. That you can pair with your phone via Bluetooth. That way you can look at activity, or what if we can look at memories, or what if we can download stuff like the movie The Matrix, where Neo goes, "I know kung fu," or download the manual of how to fly a helicopter, just like that. I mean, what is this guy thinking? And he's been working on this project for many years, and a lot longer than before he announced it, because he only announced this a couple years ago. He goes, "Oh, by the way, you guys, I've been working on this. It's called Neuralink, and this is what it kind of does." And so, but anytime the government tells him, you can't do it or whatever, he finds a way to do it. And so, but just know that Tesla has a lot more tricks up their sleeve. And they're definitely not done. There's definitely more to look at. And there is a website too. It's called Long Forecast. When we type it in, we need to maybe type in something other than that. Otherwise, you maybe get a lot of weather websites. But longforecast.com can provide us kind of a hypothetical artificial intelligence view of its stock movements. And so this is the current hypothetical forecast for Tesla. So we see, like for April, we see a minimum, maximum, minimum $147, maximum, $207 a share. Same thing for next month. I would say that this is pretty accurate in a short period of time, not a long period of time, because obviously the artificial intelligence system that develops these things don't exactly know what's going to happen before it happens. It doesn't follow our economic cycle and stock market cycle, so it just doesn't know. But I have learned that it is pretty accurate within a short period of time, but not a long period of time. So that's why you want to take it with a grain of salt. But at least we do see with this kind of forecast that we should see it begin to recover slowly, but surely. But it looks like it should be, it shouldn't really go much over $200 a share, until further notice. And we have to tell the end of the year. But then going into next year, which next year should be a pretty massive bull market, because again, as we talked about earlier in this meeting, the quantitative easing, where the stock market, or when the government starts buying stocks from the stock market, but then also the interest rate easing, where the government starts lowering interest rates. This is going to be a full-on bull market for probably the majority of next year. So we're going to see a lot of stocks surge because investors in Wall Street want to take advantage of this situation. So, but that's why the government's trying to do the quantitative tightening now and increasing interest rates to try to get, the stocks down, and before they start buying more stocks. And so that's kind of what the forecast looks like. It looks pretty good. It shouldn't really be much lower than what it is now. When Tesla reaches this point, which is interesting, because when Elon Musk bought Twitter, they were talking about it, and then the stock kind of went down, and then they did it, and then the stock went down a little bit more. Well, Elon Musk buying Twitter upset a lot of people with Twitter, but also a lot of politicians and a lot of other, types of people. But it started to kind of, cool down. But all of a sudden, the whole Twitter file started to happen, where Elon Musk and Twitter started to reveal a lot of hidden secrets in Twitter's closet. All the the bad things that they did to manipulate people when it came to like voting, or hiding certain things that politicians were doing. They got the FBI involved, or other government agencies. I mean, they just made the government look really, really bad. And I can only imagine like that movie Wolf of Wall Street. Tell everybody to sell. We need to turn this thing into a penny stock. And we watched Tesla go from $200 a share to nearly $100 a share. And but at that point, we started buying in. That's a great price point to start buying in low, because Tesla always recovers. And so but those days are now gone. All the Twitter files are out. I think all the government's dirty laundry is pretty much out there, and now it's just time to make Twitter better, make it the way that it's supposed to be, and now it's time to recover the Tesla stock. Well, one of these days, Elon Musk could also put Tesla, or offer Twitter back to the public, so we could easily see Twitter back on the stock market. And if that happens, that's also going to help out the Tesla stock. And so we could easily see Tesla back in that $250 range to $300 a Tesla share. And so, plus once with the whole rocket thing that blew up the other day, rockets blow up, especially when we're doing these testings and stuff. I mean, Elon Musk, when he was developing these rockets that operated by themselves, they can land themselves. There was so many rockets that blew up, but now he got that perfected, and they launch themselves, they land themselves perfectedly now. So this new rocket, which is the world's largest rocket, that's a different animal. They have to calibrate certain things. They have to learn from this data and everything. It's not always going to be perfect, the first several times, but with the data, they know how to make it better next time, to the point where they'll perfect it. And when that does, and that could be a year from now or whenever, but when it does, it's going to help Tesla stock. So there's so much in the pipeline that's going to help Tesla that it's not even funny, and it's going to be very, very valuable. But again, with Tesla, or Elon Musk saying that eventually Tesla will be the most valuable company in the world, we'll have to see if that ever happens. But it is one of the most valuable companies in the world, and it will maintain that for a very, very long time. So hopefully that information helps. Anybody else have any questions or comments, anything they would like to either provide or don't understand? You can unmute your mic, you can talk, or you can chat in the chat room here. Ian says, how often do we do these meetings? Basically every weekend, unless it's like a holiday week, a holiday weekend, then we don't. But regularly we do this every Sunday morning. That allows us to kind of look ahead. It's kind of like having a crystal ball. We're trying to figure out what's going to happen before it happens, looking into the future. It's always easier to look in the near future than it would be in the later future, but it still can be done, obviously, as you can see here. But And then another question, how do you go to the NASDAQ page that shows the options activity for all the active tickers? So the NASDAQ, so a lot of times if you just go into Google, type in NASDAQ, and then the ticker name followed by most active options, Google should provide you the page to it. If it doesn't, it'll provide you a similar page. Just scroll down to the bottom, and then you'll see down here, back to overview or whatever, you'll see most active options for that particular ticker. So again, go to Google, type in NASDAQ, and then whatever ticker name that you're looking for, followed by most active options, and Google should provide you that page. Once you get that page URL, the only thing you got to do to the URL is change the ticker in the URL code, and then that way it will provide you a whole new set of information for that particular stock option. So any other questions, you guys can reach me in the chat room or directly on Facebook Messenger. Thank you guys so much for coming. Make good choices, and let's make a lot of money.